The Federal Reserve reiterated its commitment to quantitative easing this past week, and Cyprus, as many of you know, has continued to rattle concerns in Europe. With us to talk about the technical trade on gold in light of this news is Stanley Dash. Stan, thanks for being with us.
Sure, Joe. Thanks for having me.
So, Stan, a lot of people might be looking at the technical trading of gold. We saw that gold went over the $1,600 level. What are you making of the gold trade as a technical analyst?
You know, Joe, you and I have talked a number of times over the last few months about gold, and as a technician, I kind of like to describe the chart as being very thick. That's not very helpful sometimes, but if you look at gold, there are so many levels. The way to break it down is to start at higher time frames, try and find levels that seem to have more significance, and then see if those levels hit again at lower time frames. And between Fibonacci support and resistance, there's quite a bit. So I started taking a look at the weekly charts. I said starting at the higher time frame, and the levels that most people are interested in at this point are kind of resistance levels, because people are trying to figure out if we're going to continue the rally, at least the modest rally that we've had. And the levels really start that we've pulled off the lows a little bit. Momentum is eased. You know, we're not so oversold. We're a little more neutral on momentum. But if you look at that long-term trading range, and I'm going back to middle 2011, we're still in the bottom quartile of a 20-month range. So we're still sitting near our lows. The nearest resistance level on the weeklies is about a 1628. It's a Fibonacci measurement, and you're going to hear a lot of fib numbers because that's what we're trying to do to dissect the thick chart. That 1628 number is really pretty important. Now, we know going down to the dailies, that 1620 appears pretty important. That's another Fibonacci number. It was the highs we made on 2 different days back in February. So I just gave you a 1628 and a 1620, and you're getting this sense that thick chart, there are really a lot of numbers that are pretty condensed.
Sure.
Joe, if you got a minute, I'll throw one more at you that proves the point.
Go ahead.
When we break down to the intraday chart, there's a number at 1626. Now, that's a calculated resistance number on the pivot system. Many of your viewers probably are aware of that. It's also an old low from January around 1626. So we just broke down numbers, 1628, 1626, 1620. That's a pretty thick chart, and the sell-off this morning is kind of bearing that out.
Sure. And a real quick take from you, Stan. People might be looking at lower support.
Sure.
Where do you think it sits around?
Yeah, you mentioned the 1600 level, and that's, of course, I think that's a little bit overrated. It's a psychological number, and we shouldn't overrate the psychological aspects, and we kind of held around there this morning. But I think more important than the short term, the psychological 1600, are the levels down around 1585. We've got another Fibonacci level down at 1585, and if you go back to the trading range we were in day after day in early March, we kept topping right around those levels. That was about 6 or 8 trading days at the beginning of March. Couldn't really punch through those middle 1580s. That, I think, is really the next important support level. I think it's more important than the 1600. We may or may not, take the 1600 out, but that 1585, I think, really has some technical significance before, we retest the lows of the move altogether.
Well, Stan, thanks so much for breaking it down for us today. We hope to have you back again soon.
Anytime, Joe. Thanks for the opportunity.
You heard it from Stan. Hot in the technical range. It's a tough one to play. Maybe on the upper end of resistance at 1628. On the lower end, don't think so much about 1600. It might just be a psychological level. With that, I'm Deaux, The Street.